Okay, so that's the take coming in from the global side of things. And really, essentially, you want to keep your eye out on crude because that has stayed very, very well under control. Under the $72 a barrel mark on Brent is surely a positive with regard to Indian markets. So at least the cues today seem far better. You're seeing a decent kind of a move. When you're looking at, let me in fact go across. We have a global voice joining us this morning, Andrew Freris, CEO at Ecognosis Advisory. Andrew, great having you. You continue to reiterate, Andrew, that global markets, or rather US markets, have run ahead of themselves. But earnings have come in a far stronger fashion than what most were penciling in. And even the outlook looks much stronger, given the AI wave, given the capex, given the strength of flows into the US. Does that at all change your hypothesis? Do you believe that the rally largely may seem justified if you look at it 1 year, 2 year forward in terms of earnings growth?
I'm afraid I have to disagree completely that earnings growth has been good. The earnings growth of the S&P X, the most important stock, for 25, they had no earnings at all. They had no profits. And the first quarter, they continue to have losses. And this is one of the key stocks that drive the economy. If that's good news of earnings, well, then I stand to be corrected. No, I do believe, like BIS, Bank of International Settlements, that all this is going to end up with tears. I have seen absolutely nothing, particularly after the SPX raised over 70 billion, forgotten now the exact number, with additional write-downs, writes-up. They come back actually for an additional loan. What you mean? They hadn't thought of that before? It is so irresponsible and so naive, and so amateurish that I fail to see how people can possibly carry on holding their shares with them. But never mind, not my problem, their problem.
So what would be the apt strategy when it comes to equity investing across the globe right now, Andrew? Where is it that you would have your overweights and underweights?
I will still continue to stick with some of the markets in Asia. Now, the spectacular performers were, of course, Taiwan and South Korea, but they were also at the back of a big boom of their artificial intelligence. And now Korea joined the dance with 1 trillion US spending on artificial intelligence investments. Really? And also, of course, like the Americans, they haven't told us who is going to buy the products that 1 trillion is going to produce. Once again, I fail to see that. So for the time being, unfortunately, these are two good stock markets, relatively good stock markets. Then, of course, we had the relatively strong performance of Singapore. And of course, the Nikkei is doing very well. It's almost 30%. Now, I'm going to emphasize this. If I was to tell you that I advised my clients at the beginning of the year to buy overall one market, and now they are making 8% in US dollar terms, what will you tell me? Nobel Prize winners for Andrew Freris. He's the guy that makes me millionaires. You know which is the 8%? S&P is one of the least best performing markets in the world, and still people carries on buying them. Why? Again, I have absolutely no idea. How can you buy a company that makes losses and carry on pumping in money into that company that makes losses on the expectations that they will not make losses? Okay. I don't want to sound either too naive or too crude, but after all those years in the markets, I look at it and I really don't believe my eyes. But anyway, it's not my money, it's their money. At least if my clients listen to me, good. If my clients don't listen to me, well, it's their money, once again.
Andrew, how do you look at the Japanese market at this point in time? You have the yen, which is at roughly 4-decade low. There's anticipation of regulatory and maybe intervention which is going to come in for yen. And with that in perspective, how do you look at the Asian markets, including India?
India, I'm afraid, is a market that has no good news, no bad news, okay? And hence that is reflected on an incredibly flat overall performance. I would like to think of something that has been taken in the policy making of India, and I can't find any. And also, of course, very unfairly, the Indian market has been, in inverted commas, accused, okay, of not having an artificial intelligence sector. There you go. So you could say, here is India, 1.2 billion people, a huge market. Where is your artificial intelligence individual performance? You have piles of Nobel Prize winners in nuclear physics and in engineering. Why they are not busy pumping in the money? I could actually tell you, good luck to India that hasn't joined this kind of crazy business of just spending money because it looks as if it is a good idea. But unfortunately, this is not what drives the market right now. So that's one aspect. And as far as Japan is concerned, it has a reasonably good economy. It has quite a safe central bank, which is going to increase interest rates because they don't like their inflation. And this is likely to boost a little bit the yen. Also, they are spending more overall, but they haven't got crazy on artificial intelligence. And that's important. And they're also spending a lot of defense. And defense is always one of my favorite sectors. So yes, I will add, of course, Japan on my favorites as far as Asian markets is concerned. But unfortunately, as far as United States is concerned, I remain exactly the same. I'm telling my clients not to add and to continuously subtract of their holdings of all US market, not just one, because once the bubble bursts, that's going to take down everybody. It's not going to take down just the 8 big ones and the usual suspects.
Andrew,
Facebook, Google, InfoSec, and so on.
right. Andrew, if this bubble were to burst, as and when it does, what's the ripple effect that's likely to have on emerging markets, including India? What's your take on that?
It's going to have a classical stage effect. Once the American market caves in, okay, everybody caves in as well, for reasons, again, best known to themselves. I will have no idea why, if the S&P goes down by, let's say, 10% in a couple of days, you should sell Sensex. Why? I mean, what Sensex has to do with the S&P? So unfortunately, everybody's going to get hit until the thing settles down a little bit. And then the realization is that not everybody has been spending money on artificial intelligence. And therefore, there is no real reason to start selling companies that did perhaps the unwise thing. So yes, unfortunately, this is going to hit everybody at the beginning. And I suspect within 3 months of the cave-in, we will be back into a relatively settled situation, but now with the United States at a very, very different position and with a lot of people crying all the way to the bank having joined in. Remember, there is a huge number of retail people buying the artificial intelligence market, like they did with Bitcoin. Okay, and what we had Bitcoin at 120, now it's at 60, and it continues to fall. Again, what can I say? Ditto with gold, of course. Gold is now well below 4, and of course, we are supposed to be incredibly unstable and incredibly insecure. Why we're not buying gold?
Andrew Freris,
that's a rhetorical question.
Andrew Freris, it's a pleasure talking to you today. Thank you very much for joining us. Thank you very much. Moving on to the Indian markets.